What's up? Welcome back everyone to another episode on Stock Review. Today, yet another Russell 2000s. Today we'll be looking at the Summit Therapeutics Incorporations. It's called the SMMT. So without further ado, let's get right into it. So over here we have the chart of price for the stock of SMMT. Looking at this chart, it's actually indicating, hey, the growth of the market, the company is actually pretty decent. It has been surging up once, twice, and almost the third time, but the third time this momentum is very low. And from the chart over here, you can actually see it's an uptrend, clear uptrends. We have the 200 MA, 150 MA aligned together, indicating an uptrend momentum. Without further ado, let's go into their financial fundamentals. So over here, we have the revenue for our Summit Therapeutics, SMMT. And from here, we can actually observe a surprisingly value whereby they have a short-term increasing from the year of 2017 up until 2019. And then from onwards, they does not actually generate much of a revenue. And for their net income is also in a very negative form and have accumulated loss in the long run until now, which have been very negative in terms of their net income. And as for the free cash flow of Summit, is also in the negative form as expected because of their company does not actually generate a lot of profits, which is in the negative form for their net income. So from what we observe of their financial fundamentals, it's actually quite surprising that how these stocks actually increase in terms of price. The company does not actually generate a lot in terms of revenue, and of course, especially does not actually profit of gain from that revenue, whereby their net income is actually in a negative form, showing accumulated loss, as well as their free cash flow is also in a negative form, which indicating that the cash flow of the company, the generations of cash or profits is very weak. So over here we'll be looking at what does Summit Therapeutics actually do. It is actually based on US, a biopharmaceutical company, which their core focus is to develop oncology therapies that are patients, physicians aiming to improve the quality and duration of life for individuals with serious unmet medical needs. So one of the mainstream income is actually their drug licensing and partnership of their specific drug called the ivonescimab. I'm not sure whether I'm pronouncing it correctly. And second of all, it's definitely the sales and commercializations of that drugs. And also thirdly, is mainly from China market royalties, because of Akisa already got conditional approval for their specific drugs in certain lung cancer cases in China. They also have grants and other incomes, including the biotech firms sometimes receive the research grants, tax credit, as well as one-off income. And also one important note over here is that as for now, Summit has no significant product sales revenue. They are not profitable yet. So their income stream depends heavily on the clinical trial success of their specific drugs, their partnership deals, as well as their drug commercializations. So moving on to the strengths and weaknesses, the strength is actually unique lead assets because of their specific drugs they have. They also have large market opportunity, targeting the non-small cell lung cancers first, which is a common type of lung cancers with can be solved by using their specific drugs called the ivonescimab, and also have a very strategic partnership potentials with AstraZeneca of 15 billion licensing deals and so on and so forth. As for the weaknesses, the company, as we mentioned, we just talked about the drugs itself, which is the ivonescimabs. They are very single product dependent. They also have clinical risks whereby their recent data show progression-free survival benefit, but not overall survival, and also have weaknesses in the oncology approval. They also have this situation whereby they face in terms of no meaningful revenue yet, not profitable, as we also observe from their financial fundamentals. And they also have competition is fierce, including Merck, including the Bristol Myers, Roche, and others with entrenched positions, as well as cash burns because of their late-stage trials consume a lot of cash, as well as without strong partnerships, the summit may need to raise a lot of money and also have shareholder dilution. So overall, this company is in a situation whereby they are selling a drugs to deal with non-small cell lung cancer, a type of lung cancer, whereby they're still in the stage of not profitable, not increasing revenue yet as observed. So they also actually highly dependent on a single drug, which is called the drug of Innovent, Schemab, so on and so forth, that deals with the lung cancer itself. Over here, we can observe increasing price stock, but what exactly is the motives, is what drives the market to actually goes up. It can be the potential upsides of this company when the product is finally being commercialized and actually brings a lot of potential high revenue for this company. It will eventually leads the company to become profitable in the long run. However, from here, I do see that the company itself does not actually have that edge or competitive advantage in this competitive market. And lastly, let us look at the ratios, which is called the debt to equity ratios at less than 1, even less than 0.5. ROE in the negative form, as well as ROIC in a negative form. Inside the balance sheets, we need to find the total cash, and you can actually expecting to have negative, but surprisingly, the net cash of this company is actually in a positive form, meaning that they still have a lot of debts, but then their cash is greater than their debts, can be potentially explained by the grants that they obtain from research grants, tax credits, which will actually become their main stream of income in order to conduct their clinical trials as well as testings, which burns a lot of cash. But in this case, they do have a lot of cash in order to run and to test their product before being commercialized. So let's go into the economic mode score of this company. And we can actually observe from the financial statement itself, it's actually really bad, and indicating the company that it's not providing any cash flow as well as not generating any profitable yet. However, at this point of time, we can also expect that the economic mode score is actually very low, and total score is actually at 3.2, and I would consider this as a very narrow mode. As summary, overall, this company is in the states of not profitable yet. They do need a lot of cash in order to burn it and for their drugs trials and testings. However, for the net cash, I do see they have a very good cash value from their grants and so on and so forth with low debt equities. However, the company is just not being able to provide a consistent and predictable profits right at these situations. And for their business model is that they are too dependent on a single drugs that actually deal with one type of lung cancers, which actually lose their edge as well as advantages in this competitive market. So my take is that this company is a low quality company, of course, especially with the economic mode score at 3.2, indicating a low or narrow mode. And I would actually personally to prevent investing in this company right at this moment until maybe in the later years we will be actually observing, hey, this company somewhat provides a great profits, predictable, consistent growth. Only then I will be deciding whether or not, hey, if that time is actually a better investment opportunity. But right now, I don't see any potential through this company. So if you actually interested in this company, do your further due diligence before deciding what action to take. And I hope this video actually helps you in your trading journey. And also, if you would like to support me, please click the thumbs up, subscribe to my channel, and also share this video to your friends. And I guess that is all for today's video, a very short one, just that I don't like this company, does not meet my criteria, and that is all. So I will see you on the next stock review or in the next video. Ciao.